So we are officially live, just to give you a heads up, so you don't say your social security number again. And then let me find a link, and then I'll tweet it and message it to you.
It is really cool how with the share screen function that you can pick exactly what window it's showing. Like I have all these windows open on my computer and it just shows the one that I want.
Yeah.
Cool. Even if I like tab out and shit, it's still just showing the same one.
Okay. I just sent it to you. And I just tweeted it. I need to get some thumbnails for my YouTube.
Yeah, I mean, I literally just let the thumbnails auto-generate when I make videos.
That's what I do too.
You're right. I mean, I don't think I could be one of the people that has like an actual cringe.
Oh no.
Like the pog face or anything like
Dude,
that. It probably is a good idea for me to have something.
I hate those so much, but maybe just like a plain screen that
Very
says like,
unfortunately,
yeah,
actually work.
I know, that's the thing. Like YouTube is just so cringy and it's such bad content. That's why I've kind of been trying to focus more on YouTube recently, because it's like, okay, let's try and get some good content out here.
Well, your base of people is so much larger that you can get from YouTube.
Yeah.
So many more
Yeah.
over there.
Yeah. All right. What's up, Dark Arts, Shaquille, Rolly D? Can you guys hear Magus? Is it Magus or Magus? I forgot to ask you. Magus?
Magus.
Magus? Okay. Can you guys hear TraderMagus?
Yo.
There's usually like a 30-second delay or something like that. So, what's up, Jeffrey? What's up, Neon? We'll give people a little time to show up.
Going through comments on one of my old YouTube posts, and
yeah,
so, like this is seriously like so old too. It's like 8 or 9 months old, and I see a comment that someone just posted that stops are not liquidity, bro. Like, yeah, I'm pretty sure they are. But all right.
That's unreal. What's up, Jazz, Barney, John? Okay, it sounds like, or it looks like they can hear you. So audio is good. We'll give people like 2 more minutes to get in here. How's everyone doing? I guess from when I asked that, there's a 30-minute delay. So sorry, 30-second. Could you imagine 30-minute delay?
Get really scared of leaking alpha, apparently.
Yeah. Right. I think I dropped it in the Telegram. Yeah. What's up, Noel? Chart Doji, please, Doji. I'll let Magus handle the Doji. We'll get the market profile on Doji. Barney says Litecoin.
Oh, I forgot about the chart requests. Nice.
Yeah, it's okay. I'm not sure if people are serious when they ask about Doji or not. Fawaz, cause love your streams are educational, super valuable. Thank you, bro. We're planning on doing more. I want to bring on people you guys think are smarter than me, and so that they can tell us all what to do.
Keyword think. Not actually, just think.
Yeah, Litecoin's playing out pretty well, Barney, and Jazz.
Litecoin's one of my worst plays because I bought in at $92 and I just sold it too early. That was one of my biggest mistakes thus far.
Really?
I sold it way too early. Yeah.
I think Litecoin, LTC BTC chart and the LTC ETH chart are looking pretty good, and so I wouldn't be surprised if it keeps performing well. I mean, they're looking better than most other alts, but we'll dive into that in a little bit. Let's see. Doji needs some TLC. Yeah, it does. Can you do a wave count on Bitcoin? I do not use Elliott wave theory. All right. I think we will get started. We gave people, how much time did we give people?
It's the beauty of the VOD too, is they could always just go back and
yeah, exactly.
watch it if they missed it.
It's all gonna be or it's all recorded and it'll all be posted on YouTube. So we'll just get started. People can hop in whenever they want. So my kind of plan was I'll start by talking about Bitcoin, Ethereum, and Litecoin, and then I'll hand it over to Magus to talk about whatever charts are jumping out at him right now, and we'll do a little screen share so you guys can see his screen, know what he's talking about, and then we'll just see where the live stream takes us, answer some questions or do whatever. Rage, yes, it is being recorded, so you can always go back and watch something you missed. Okay, so let us get started. Last night when I was recording, it was probably right around here, and we were just looking at this 49.9 level on Bitcoin. We wanted to see an hourly close above that. We had tested it probably like 6 separate times. I tweeted a chart about how this price action here looked similar to Ethereum from a little while back. It's just kind of this slow grind up that you would expect to just nuke, but recently that slow grind up has always broken to the upside, and that's what happened. It didn't give the perfect retest of 49.9, but if you bought on the hourly close, you would have gotten in at 50.7 or so. Later in the day, we formed this little range, broke out of it earlier, and it looks like we're about to test the range high. I'm not entirely sold on if this just keeps trending from here. The two things I'm kind of looking for is if either this is kind of the range that we're in and maybe we come back down and retest the origin of the breakout. It might give us that 49.9 retest right here at that dotted line. And we also have some hourly demand right there, which was right before this nice move up to break out of this consolidation. So that's definitely a level you want to keep an eye on. Maybe we'll get a wick into that and then reclaim this range low and push from there. But yeah, I'm not the ranges that I use, they kind of adjust based on how things are looking. Like at one point this might look right, but then if this falls back into the range, I might think that this leg is where we're trading in. So we'll see what happens. But a pullback to 49.9 would absolutely be a buy to me. And we're just going to look for continuation plays if you are not in already. And even if you are, we can look to compound. But Ethereum is looking... I don't even know what to say about Ethereum anymore, man. We did get a spike up of above 1850, which was kind of my line in the sand that I wanted to see us break and close above. You can see that was the initial high right here. Well, the high that swept these ones. We kind of deviated above that, whatever you want to call it. And then since then, we've had 6 wicks into this level, but haven't managed to close above. We finally did close above, but then on the very next candle, we dropped right back down. This isn't the end of the world. We're bouncing from Monday's high right now, which is good to see. But I would like to get back above 1850 as soon as possible to add some confidence to ETH or to Ethereum going up. I am kind of waiting a little bit on this. I started after this closed above. I set some limits at 1850. It's not a full position because I wanted a little more confirmation, but I have started building a position here, and my stop loss is just under the weekly open at around 1800. However, if we lose Monday's high and kind of break below this level, the origin of this pump, then it will kind of confirm for me that this was just another fake out and that Ethereum is not ready, and then I would just cut that position. But if we can get back above, I'll be looking for opportunities to add on it. So Ethereum, it's a little tricky right now. Using this 1850 level, it kind of looks like it was just another fake out, but since we're holding Monday's high, I think there is a little bit of room for optimism. So it's going to be interesting to see how the daily closes and this 4-hour candle, because honestly, if the 4-hour candle closes like this, I'll probably cut that position and just look to get in later. Who knows? Maybe we get a pullback to like 1785. We have some nice, I know that's probably not what most people want to hear, but we have a nice little level there, and I'm sure some stops have been moved up around this 1800 level because I know that's where mine is. So a move into that and then get back above the weekly open would be another long scenario I would be watching. But Ethereum, I guess overall, a little messy right now. Main idea is if this 4-hour candle closes back underneath 1850, I will probably cut that long and just wait for a little more information. Okay, so then with Litecoin's looking good. I'm still looking for this 250 target. I'll delete this one because I'm not in much of that position anymore, even though that was one of my best limit entries in a while, so it kind of feels good to leave it on the screen. But we broke out above 228. That's kind of the line in the sand, same as that 1850 that I was watching on Ethereum. Litecoin's definitely been showing more strength with this. I mean, it's up, what, 10% on the day, while Ethereum's up 3%, Bitcoin up 6%. So Litecoin's showing a lot of strength. This was the continuation play that we talked about in the previous stream. It was going to be a break above 228, and then I was looking for a retest of that level, and we got that. Had a little bit of drawdown because after it closed above, I set some limits, got filled, bounced from 225, which was where we were looking to take profit on that other long. So that's good to see. Nice bounce there, back above 228 and also above 230, which was these equal highs that we swept right there. So holding above 230 would be super bullish. As long as we hold above 228, I will be comfortable in this position. If we lose both of those levels again, then kind of same as Ethereum. Looks like we might get a little bit of a pullback, but yeah, I still think it's a little early to say on that right now. I think Litecoin looks really good, targeting 250, and if we hit that, I'll trim some off and look to add on later. So this 225 level was another great example of what I've been preaching in like every single one of my videos recently. I've been saying when it hits resistance, just take your profit, take your money from the market, get out. You can always get back in. Don't just hope that that resistance is going to break. Instead, take profit at the resistance, and then on a flip of it, you can always get back in. And so that's kind of what I did. I trimmed some of that other position off at 225 right here, and then it initially got rejected, bounced from Monday's high, broke above, and then bounced at 225. So that's kind of exactly how I wanted to play it. We got back in at 228, and we'll see what happens from here. If we can get above 250, my next target's around 300, and then obviously all-time highs after that, which is I think like 420. I don't have it on the FTX chart, but that is what I'm seeing on those three more major pairs. I know we've been talking about Link in most of my videos, but Link has been doing absolutely nothing for me. We had that long from this demand right here, closed it at 34.8. That was super lucky. Not every trade goes that perfectly. But since then, it's kind of just been chopping around, consolidating. So I don't really have anything to update on with Link right now. So those are kind of the main things I'm seeing. It'll be interesting to see how this 4-hour candle and daily candle closes, and we'll still be on the stream for that to give you guys updates, but those are kind of the main things I'm seeing. So Magus, if you're ready, I will pass the mic to you.
All right.
Here, let me pull up this chart. Can you guys see his screen just fine? Trader Main, what's up, buddy? Thanks for stopping by.
Oh, that's what it is. It's the stream delay. Okay. Because I hear you ahead of the stream.
Oh.
So when I was looking at your chart and it wasn't adding up, like you were talking about ETH and it was
Yeah.
Bitcoin.
Yeah. Yeah. Okay. So you hear me like 30 seconds before everyone else. Gotcha.
All right. Well, yeah. So I guess they can see my screen. This is like a simple trading view setup that I'm running. What to talk about? I think before I like get into any charts or anything, I made a video recently about adaptability and like adapting to changing market environments, and I wanted to talk about the idea that most people probably know me for more intraday stuff because that's normally what I've shared in the past, but the past couple of months have really presented the opportunity for me to move more towards a swing trader approach. So I got really lucky that I got into DeFi pretty early with a lot of spot buys, and I'm currently starting to actually sell them off, which I know is not really what you want to be doing right now, but I'm just fairly confident that the majors, mainly Bitcoin, ETH, and Litecoin, are really going to just rob the liquidity from the whole market soon. And I don't want to be overexposed to DeFi when that happens. So starting yesterday, early in the day, and I've pretty much been doing this like constantly. I've just been slowly cycling out of DeFi into Bitcoin and ETH primarily, mostly Bitcoin, just because it's the safer play. So I don't really know where I was going with that, but that is something that's like the main play I'm focused on right now for high time frame. Is I think that since Bitcoin's breaking out of this range here, that you really don't want to be overexposed to altcoins for it. We've seen it so many times, right? When Bitcoin really gets moving, all the liquidity in the space gets sucked out of the altcoins to fund the move up for Bitcoin or move down. It could be either or. And yeah, I know that's not necessarily what everyone wants to hear because everyone likes their altcoins, but I don't think altcoins are going to perform that well over the next couple of weeks or so. So just something to be mindful of. That's just my take. It's just an opinion.
Yeah, I don't remember who tweeted it, but someone was saying, like Twitter seems quiet today, and I think whenever Bitcoin kind of takes the show and starts running, people are always disappointed because they have more exposure to alts.
Yeah, CT is slow. They always lean towards altcoins more than anything else, and I get it. That's your best opportunity to make real money is through an altcoin, right? You're not going to necessarily make life-changing money on a Bitcoin long unless you're degenerately long with a lot of leverage, and it's not going to be that's not going to work for most people. But yeah, that's my read right now. I think that the DeFi run up is definitely not over, but I think it's going to take a breather for a while. And I would rather just shift my exposure over to what I think is going to perform better during the time, which I think is going to be Bitcoin. And I definitely have a really strong long bias on ETH too. And I guess I want to talk about the CT meme of ETH because whenever you go through Twitter and you see people talking about ETH, it's constantly comments about how ETH just doesn't perform. And I know that Bitcoin's performed better, but it's really always been so confusing to me why people struggle so much with ETH because it's done really well. Just look at the chart. I guess we have my screen. If I zoom out a little bit, it's trending just like Bitcoin is. And the only difference might be that it might have more fake outs, but it's a less liquid market, so I think that makes sense. I'm sure that if we put Bitcoin and ETH side by side, it's probably going to look pretty much the same. Oh God.
Yeah, it's like everyone's disappointed with Ethereum right now, but then you see it's run up from $700 to $1,800 like this year in a month and a half.
Right, and tell me this isn't essentially the same type of structure. I mean, because it just the only difference is that Bitcoin just started before and ETH's lagging it, but it's essentially the same type of breakout. And I mean, I've done a lot better swing trading ETH than I have Bitcoin. So I just always find it so curious that people are always in so much pain with ETH. It's almost like Twitter. I mean, I guess this is the human way, right? They're getting bullish at the range highs and getting bearish at the range lows. And if when we get into the consolidation phase on ETH, if you're getting long into the upper wicks, I mean, of course you're going to have a bad time. You need to get long into the sell-offs. So I mean, it's counterintuitive to our psychology because our brain tells us that things are good when things go up. But if you have a macro long bias, which I do, it makes it easier to buy these lows. And something else I guess I'd like to touch on too is that stop trading the perpetual contracts when you want to hold on to things. It's such a CT thing to do to get long on the perpetual when you want to catch a breakout. And it just makes it so much more painful because you're paying to keep a position open the entire time. If we're in a bull market, funding is going to be positive the entire time because everybody's going to be willing to pay to be leveraged long. So if it's something you want to catch and ride for a while, you either need to long through spot, which is definitely the best way to do it. And if you want to leverage it, you just trade the 3 months or the 6 month futures contracts because there's plenty of liquidity there for a normal person, and you can put on some minor leverage and just do nothing. I mean, I have a long that I've had open on ETH from 1142, I think it is, and I've had that open for a while now. And the big thing that I think that's enabled me to just sit and hold it for so long is because I'm not paying to keep it open. I took a similar trade at the beginning of the ETH trend where I had a long at like 340 something, and I closed it at like 607, I think. And sitting on a perpetual trade for 3 months is not fun because when you actually sit and look at how much you paid in funding, it's a lot. And the exchanges intentionally aren't going to make it super obvious how much you're paying in funding because, they don't really want you to know that. But when you actually do the math, it really eats into your profit a lot. So I would say, and there's no acquired knowledge, right? Like if you want to trade an options contract, you really need to know how an options contract works because of the way that the Greeks work. But with a futures contract, the only thing that you need to worry about is you want to settle that contract before it expires, right? So the current contract is the March one. So I have until like March 25th or March 26th, I think it is, before I have to have settled it. I want to settle it before that so that liquidity doesn't dry up on it. So I would say I have a couple more weeks before I need to get out of this ETH long. But in that time, I don't think it's unreasonable that ETH gets to 2200, which that's kind of my end goal for this swing trade. I'm long from 1142, and I'm looking to get out at probably 2200. I think that ETH is going to go ETH and the entire market is going to go further than people expect because we can break out our fib tools and whatever, our psychological levels of 3K or whatever. But I do think that just like how Bitcoin went further than people ever expected it, once once ETH and Litecoin and whatnot get going again, that they're going to go further than we expect them to, just because that's actually, I mean, that's the max pain scenario in a bull market, is to go further than people expect because everyone's going to take profit on their trades and think that it's the top and try to short or something, and it's just going to keep going. So yeah, I'm super bullish on everything. I think that the best play for people is to use low leverage trades, and you just cycle between whatever asset class within crypto is performing the best at the time. So there was a time when it made the most sense to be long DeFi, and I think that time is coming to an end now. And a lot of my friends will make fun because I've just, every time my friends try to call the top or meme on me that it's the top um, on DeFi, I just tell them, no, it's not. But that this time I actually agree with them that I think that DeFi should slow down temporarily and the majors should take over.
Yeah, I think so too. And one thing from the chat really quick that Rectproof just said, holding Ethereum as collateral can also be the equivalent so you don't tie up funds with futures and perps. And that's one of the reasons I think it's good to trade on an exchange that lets you hold like whatever you want as collateral. Because like if you're more bullish on Ethereum than Bitcoin, for instance, just rotate those funds from your trading account, hold your collateral in Ethereum, and then you can long Bitcoin, let's say, if funding is a lot less, instead of holding Bitcoin and then longing Ethereum with a futures contract. So you can kind of use your collateral to your advantage and hold whatever is the most expensive to leverage long, or whatever you think is most bullish at the time, and then long something else with lower leverage or something like that. But I think that's a good point.
Yeah, and I mean, I don't want to sound like pompous about this, but I'll preface it that way. But if you have the money to where you don't need to leverage trade on a swing trade basis, just trade spot, because it's just, you know, I don't really put stops on my spot trades. I know that that's kind of against the rules, so to speak, but I just when I have high conviction in something like a DeFi play or like a ETH, I just buy them and wait, and I don't really pay that much attention to them. I kind of just let them do their thing,
So
and
much less
as long as you
stressful
have
too.
conviction, yeah, I mean, I have no risk of getting liquidated. I have no risk of getting stopped out because I'm not, they're like investments. They're less of a trade than and more of an investment when you have really high conviction. And for me, I watched the first DeFi bubble play out, and I missed a lot of it, but I knew that this was the place to focus up on. So when DeFi started to bottom out and I saw the trend starting to pick back up and become more bullish again, I started buying a lot of DeFi, and primarily just the blue chip things that you see Twitter talking about all the time. I just bought all those and I just kept adding to them until, until everything ended up going up a lot. And, for me to see Aave in particular go from like $90 to $500 in a matter of a couple of weeks
That
was
was
pretty
nuts.
crazy.
It's
Yeah.
also,
So
yeah, like you've been saying about spot, like I just think it's a lot easier to hold on to a spot trade instead of a leverage trade and just ride the trend for longer.
yeah, absolutely. And I mean, um, I think this is kind of what Recproof was pointing out, that I have friends that have similar bias where they're really bullish on, or they were really bullish on DeFi. So what you can do is, I mean, there's contracts, there's futures contracts that are inverse perpetuals, so you can use your altcoin as collateral on the trade. So you know, for instance, the first thing that comes to mind, so I don't have to make something up. I have a friend that killed it on DOT because he bought a bunch of DOT spot at the lows, and then he went leverage long for every breakout play through the inverse futures contracts. So he's got the spot, he's leveraged long, and then he's getting paid in DOT when the trade goes in his favor. So he's just accumulating more DOT the entire time while he's leveraged long on it. So this guy in particular, I mean, this DOT trade, I'm sure he just absolutely killed it because he had as much DOT exposure as he possibly could, since he had the high conviction play behind it. And I'm sure if you look at the DOT chart, it's gone up, you know,
From
probably
like,
not 1,000%, but I bet it's gone up
yeah, it's
something
like
close to that.
a few bucks to 32 now or whatever. But no,
Yeah.
yeah, those kind of trades, those can make your
You can
quarter.
see my initial range
Yeah.
that I was watching it from, and I mean, look at these things. Once they get out of this accumulation cycle, they just go ridiculous numbers. To be
Yeah.
up 530%, and DOT is showing absolutely no signs of weakness. So this is one of the only DeFis that I haven't really taken much off of yet. A lot of them I started to shave down. Like sushi, I did like 1,300% on almost. So I mean, it was just like I can't not be a rational person and take some off. And I didn't even take it off and turn it into fiat. I just sold it into Bitcoin because I think that I just want to keep riding that wave, and that's probably the 2017 experience coming out, because there was really the strong trend of like when everyone knows it now, because we've seen it so many times, that when Bitcoin has its impulse move, you don't want to be long. You don't want to be long altcoins as much, because it's in a way it's like being short Bitcoin when you're long an altcoin.
Yeah.
So, and you want to cycle over to the majors, primarily Bitcoin, when that impulse comes. But as soon as Bitcoin forms its next range, you want to, that's my plan, is I'm going to cycle right back into the same DeFi coins that I've been taking profit on lately. I'm just going to cycle back right over to those afterwards, and just kind of play that going back and forth between the two asset classes, because I consider DeFi to be its own um, market within crypto nowadays. I think it's proven that it's I know everything's gone up, but I don't know. That might just be personal bias. I think that DeFi has its own class within crypto nowadays.
Yeah, I can
So
see it.
that's
And
my play.
yeah, go ahead. Sorry.
I mean, I didn't have anything else to say on that. Go ahead.
Gotcha. Well, what I was gonna say was like, there's nothing worse than like we're all in crypto because we want to stack more Bitcoin. I think. I mean, at least that's my main idea. It's like these institutions and stuff are not buying the tiny little altcoin that you think is gonna go to the moon, but the reason you want it to go to the moon is so you can buy more Bitcoin with it. Unless that's wow, my dog just screamed basically. I don't know if you guys heard that, but basically like I think people use alts to stack Bitcoin. That's how I personally do it, and there's just nothing worse than being stuck in all your alts while Bitcoin goes up, and then Bitcoin's now more expensive for you and your alts just lost value in comparison to it. So that's a tough
It's the
stage
up
to
in
be in.
USD meme right there.
Yeah, exactly. And that's like, and when Bitcoin goes on these tears, that's exactly what happens. And on the Bitcoin chart I was showing you guys earlier, we basically consolidated for like 7-8 days, and it's not, I don't think we're just gonna have a 1 day breakout after accumulating for 8 days. Like I think Bitcoin is going to steal the show for a little bit here, and I don't want to be left behind with that. So
Yeah, I kind of have a rule that, like a personal rule that is not really good from a financial standpoint or anything, but it's just something I believe in, that I never want to have below a certain amount of Bitcoin that I own, because I do believe in the idea of like what it actually is, that it's, money that can't be taken from me, and money that is there. It should be uncorrelated. I don't know if that's necessarily the case nowadays. I think that, not that I'm a macro guy or anything, but I'm pretty, it's pretty obvious that the every market in the world is just flooded with liquidity nowadays. So I'm sure it's pretty obvious that has a huge hand in why markets are going up and why Bitcoin's gone up so much, because um, yeah, I mean, wealthy people don't have an option for where they can put their money that isn't a risk on asset nowadays. So, now they're just finally starting to realize that if they have to assume risk, why not do something that is anti-inflationary, right? Because everything else is subject to inflation. And the only people that don't understand that Bitcoin isn't subject to inflation are people with the boomer mindset. They can make their argument that we're going to fork Bitcoin or whatever, but we all know that that's not a legitimate argument, because there's only going to be one Bitcoin. It doesn't matter what they fork. None of those things will ever be Bitcoin.
yeah, yeah, I mean, Bitcoin is like, if you're betting on crypto, you're betting on Bitcoin. As cool as some of these other projects sound, like I think they're going to be great to make money, but Ethereum's potential is not world reserve currency or store of value, So, like I wouldn't say I'm a Bitcoin maximalist at all. Like I love alts and I think there's tons of money to be making in alts, But when my friends ask me about crypto and they ask what they should buy, I just tell them to DCA into Bitcoin, because that's like what you're betting on. If you're interested in crypto, you're betting on Bitcoin for now. Like who knows what else is going to come through and end up being really big in the future, but that's kind of how I look at it right now.
Yeah, I'm pretty big of a ETH bull too. It's not something I necessarily talk too much about on Twitter, but all my friends know I'm extremely bullish on ETH, and I know it's got all its problems and stuff. I'm fully aware, but it really has the first mover advantage, and it's pretty obvious that all the infrastructure is being built on it. So I, I'm because I'm bullish on DeFi, that inherently makes me more bullish on ETH because
Right.
all of DeFi is built on ETH.
Yeah.
So I know that even if even if the current like ETH developers and stuff can't figure out how to make it work, I'm fairly confident that other people will move to the space and figure out how to make it work if they can't. Because as we watch the meme of the future of finance play out, they're gonna have to figure out how to make this stuff scale. And yeah, I mean, I'm not a Uniswap person or anything, so the whole fee thing, it hasn't mattered to me yet. I don't really transact and do any of these ETH transactions, so I haven't really even experienced the fees that people are complaining about. So
Yeah.
to me, it doesn't matter, but I know that it's kind of a big deal to other people, and it does hurt the ability for it to be, the chain of choice if everything's so expensive. But I really don't think any of your ETH killers that people are shilling on Twitter all the time. I don't think that that's ever gonna affect it. And to me, I'm a trader anyways, so I have a long bias on ETH just because I think it's gonna go up, not because I think I'm gonna use it. Um, I don't
Right.
have any intention of doing any like. I have friends that have plan on doing the staking and all that kind of stuff when they can. I'm not really interested in doing any of that stuff personally. I'm I'm a I'm a fiat maximalist ultimately, which I know that's not what everyone wants to hear, but I'll never not have Bitcoin in my portfolio. But ultimately, the name of the game here for me is to accrue more fiat and not really to accrue more crypto.
For
Because
now.
I do think that there's going to be a time when, yeah, I mean, I have no problem flipping bias and like accepting that I'm wrong.
Right.
So
Yeah, I mean, you're
if a
still here
time
super
comes
early.
where yeah, if a time comes where crypto's proven that it's like not something that it's it's become more than something like an equity, because right now, I mean, it's just that's what these things are to me. They're just things, they're mechanisms for me to put fiat into, and then I can cycle from crypto to crypto. But to me, the end is to just end up with more fiat at the end.
Right.
If somehow crypto succeeds in um replacing fiat or something, I will have no problem joining in on that, but I find it very hard to believe that that will ever be the case. I kind of think of it more like, everyone knows that Bitcoin's going to, be the store of value. It's pretty obvious that the world's accepted that nowadays, that it is a store of value,
Mm-hmm.
regardless of the volatility and stuff. And I think that it's almost like you'll have Bitcoin being the store of value, and then you'll have the Web 3.0, which is all the other networks that are woven together. And I think ultimately you'll always have to go into the government coin to actually do your day-to-day transactions. So I mean, I think that yeah, the governments are going to have their own digital currencies, and you'll have to transact into those to actually go buy your groceries and stuff probably. I mean, and why would you want to go to the grocery store and buy things in Bitcoin? Like, I don't want to give up my Bitcoin, to go
Right.
and buy, a banana or something. That just doesn't
Yeah.
sound like a pleasant experience, especially since we know that these things are going up and down all the time. Why would I ever want to deal with that, right? I mean, that's kind of the issue. It's crazy that we have a lot of companies that are coming out nowadays saying that they're going to start accepting Bitcoin as payment. And I mean, as long as you're in a bull trend, that's fine. But if a bull trend ever fades, then those guys are going to be. I mean, we watched that in 2017. There's a lot of companies that accepted Bitcoin at the top, and it looked like, dinguses at the end of the day because
Yeah.
that $40 they took for that game now is worth $28 all of
Yeah.
a sudden, a couple months later.
Yeah,
So
I mean, I think the idea with accepting crypto payments is more like, I don't think they expect a ton of people to be paying in Bitcoin right now, but I think they want to be one of the early movers that does that. And Bitcoin as a currency, like, the only way that works out is when it's at a much higher price and a much more stable price level. But also, yeah, I mean, all that stuff is super far away, and I definitely wouldn't want to be just spending Bitcoin on my everyday purchases right now. So
imagine the pain of going and buying something one day and then realizing, hey, that $130 I just spent on groceries is now $200 a couple months later or
yeah,
something.
exactly, and that's why
Don't
I'm
want to be
saying,
that guy.
yeah, the currency argument for Bitcoin is still very far away. I think the store of value argument is closer, but as a payment system, and as like a day-to-day currency, it's obviously that's still far out there.
Sure. And as liquidity moves into the space, right, as the market caps grow and there's more and more financial tools available, right? Because as of now, really, there isn't, it probably feels like there's a lot of options to us, but there isn't. When compared to legacy markets, how many brokerages there are for legacy, and how many financial instruments they have, and how much money there is. We're still so far away from being a market like that that Bitcoin's not gonna move like it does when we're worth trillions and trillions of dollars. Bitcoin won't move the same way it will anymore because um the people that provide liquidity then just aren't going to let it move like that. So I think that maybe there's a future where it's transactable and all that stuff because it just becomes so much less volatile, but it's pretty obvious that we're pretty far away from that. This is kind of the first cycle that we've ever had where it wasn't a meme, right? In 2017, it was more of a meme that things went up so much, but this time around, people are like accepting that, like, this is a legitimate financial instrument, and that um, if you're not poor, you should probably have some Bitcoin in your portfolio.
Yeah, yeah,
Even if you are not well off, you probably want to have some of this stuff.
yeah. And I mean, if we're right about Bitcoin, it's the greatest investment of all time, and if we're not, we're still gonna make money trading it, and so
Sure.
it's a win-win.
But yeah, I think go ahead and go on to more of the technical stuff because that's probably what people will want to hear from me anyways.
Yeah, we
Nobody
kind of
cares about
rambled
my macro
about
takes because I'm
Bitcoin's
just a.
fundamentals for
No, that
like
wasn't the
15
intention, but it just happened. That's what happens when I'm highly caffeinated. I just can just talk endlessly.
Me too.
But yeah, so I'm gonna go ahead and show some TPO charts. Um, this is my ETH TPO, and this is my Bitcoin TPO, and this is what I am operating off of right now. So this is the kind of thing that people see me posting on Twitter. And to just give a brief explanation of what this is, because I know it's very foreign looking to most people that don't use the tool like this. Every one of these shapes that you see represents a day, and it's showing us the distribution throughout the day. So what we're getting is where price spent the most time during that day, because it's not always about volume and stuff. Sometimes it can be about just where price spent time at. And through this idea you can get overlap. You have days that have overlapping value, and you call that the market's accepting that as fair value when you see that. So I mean, I don't want to explain too much about what it all is because I could talk about it forever. But essentially, I am able to not only get my levels from TPO or market profile, it's the same thing, but more importantly than that, I'm able to get my bias. And I basically use these levels of bias and then overlay them onto lower time frame charts, and that's how I execute. So I'll go to the low time frame footprint after this, but I'm curious. I'm worried about the stream delay a little bit, but if anybody has any questions about TPO, because I would like to have the chat narrate how I talk about TPO because, like I said, I could just say anything. So hoping that somebody has a question about this.
Maybe a like quick overview of VAH and VAL and POCs or something like that? Or is
Oh yeah, I
that
mean I can talk about the anatomy of it, yeah, no problem. So
yeah, and then we can see if
every,
any questions pop up.
yeah, sure. Well, they have time to populate them. So we're just looking at the Bitcoin one right now. It's the ETH one is the same concept. Um, each day, so like I said, right, it's showing you how price spent time in these certain areas, right? So it's like it's a distribution curve, like a simple barrel curve. So I hope they can see my mouse.
Yeah.
When you have the majority of time spent in the middle, when you have this kind of neutral day, you have what's the green is the value area, right? So that's 70% of the day, or 70% of the time is spent there. And you have the value extremities, which are represented with the gray. And the orange line in the middle is the point of control. So, I mean, we have a really good example right here from the Elon day of an illiquid move, right? A normal healthy day is going to look like this, right? Where it looks like a simple, if you Google a bell curve, and this is what it's going to look like.
Like a
And
normal
that's a
distribution.
healthy day. I'm sorry, what's that?
I was just saying it's a normal distribution.
Yeah, exactly. And I mean, I'm not even somebody that's over here really thinking about all the day types in the distribution. How I know that some people do that, because there's all sorts of days. There's the normal distribution, there's a trend day, there is, let's see if there's a B day, here's a P day. So it's literally shaped like the letter, right? So that's a P day because the value area is slightly shifted to the upper end of the day rather than being dead center, which would be a neutral day. Again, I don't really act off any of that kind of stuff. I kind of do it instinctually and without really internalizing it, just because I've been using the tool for so long. But yeah, I mean, you have asked me to talk about like a low volume node, which would be, um, I guess, the entirety of this. These are single prints. I wouldn't really call them a low volume node, but so you had the day open up inside a previous day's value, and when when Tesla announced that they had acquired their 1.5 billion, you get the illiquid move up. It's actually kind of crazy as I'm looking at this that it actually closed above the distribution. So we moved up and we formed a distribution here, which is the market trying to decide what fair value is. And it actually closed above it, which is pretty crazy to think about, which is actually really, really bullish. Because yeah, you would normally expect that you would, on an illiquid move, you would normally expect to get the distribution and that price would shift back in and fill out the void. But that's kind of a bull market kind of thing, right? When the stronger the trend is, the less likely you are to fill in inefficiencies. So if this was a year ago or a year and a half ago, the probability that you would fill in this void so that you would, come in and just range back through that, the probability that that would happen is super high when you're in more of a range bound neutral market. But when you're in a trending market, it's actually a really good indication of how strong the trend is because it's a really low probability that we ever even come back to this. Um, a lot of people on Twitter, and I mean, I saw the play that we could come back to 42. I saw a lot of charts posted about 42, but when when the trend is as strong as it is, it's actually really unlikely that you ever come back to these kind of things because what you're seeing, and I'll move over to candlestick to represent this. When you see these formations, I think that CBS is the person that I heard make this point the first. That everyone has their oh, I could draw a triangle or whatever. Everyone has their patterns, but I think few people actually think about what the pattern's telling them, and they focus just on the pattern and think that you know, it's a bullish, rising wedge or whatever, but they don't actually think about what it is. What you should recognize is that after you have the illiquid move and you have the attempt to come back and fill in the illiquid move, right? You have the attempt to come back and do something like this. That would be what a healthier ranging market would do. It would come back and fill that in. Instead, every time price moves down, that the people that wanted to buy here, they move up and they bid here, and it comes down and they bid here. And this is like kind of the definition of what a bullish market is that every time the market attempts to move down, that the people that are aggressively bidding just move their bids up every time. So that's kind of what you're getting with these formations, and you see it with the TPO too. It's just more clear on a candlestick. That's why I figured I'd show that. But I see that as the days start to overlap, that they keep shifting up higher, and you have the illiquid move down. I don't remember why we sold this. We sold off here, but you just see that the days keep shifting up. It's always more clear on ETH. Like, I really prefer trading ETH personally on intraday at least. I know that people really struggle with it for whatever reason, but it seems to give me much clearer setups. And I mean, look at how all these days are overlapping right here. Once we get above, 1880-ish, which is our tail. Once we get above there, I mean, I think it goes to 2200 pretty quickly from there. It's just the struggle of once we have to get that real convincing break above. But once we get that, I can say with confidence that it's going to go up. It's not going to do a fake out where it goes to 1900 and come all the way back down here most likely.
Yeah, it's going to go quick.
Of course, it can happen, but it's not that likely that it does that. So now that we have a couple questions, how's TPO calculated? It's kind of difficult for me because I can't zoom. This is just a screenshot. This isn't my actual chart setup. But if I was to zoom in on this, I wonder if I go to my Twitter, do I have a zoomed in TPO somewhere? The problem is that with the TPO's the ranges have gotten so massive on the TPO that I can't really show all the price action without being zoomed out. I have to go like really far. Okay, here we go. Perfect. So this is what a TPO looks like when you zoom in, is that you have all these little blocks, and it's price moves to the right throughout the day. So the first blocks that get printed are going to be the furthest to the left, which is the opening is here in pink, and this is the initial balance, the purple line. So it's going to print these blocks, and it's showing you that as price develops through the day, it's moving to the right. So you can see that, this is why a traditional market profile has letters overlaid on it to show you to actually count it down. What I use is I just use shading. So the darker the blocks are, the older they are within the day. So the lighter they are, the closer they are to the close. So I hope that kind of answers it. That it's there. The standard TPO is a 30-minute block. So it's showing us that price opened here and really got rejected from the value area that was in, and it broke down, and basically we formed a new value area before we started our trend up. This is actually kind of a pretty good textbook setup here. I don't really want to elaborate on that too much, but I mean, I'll leave it to you guys to figure it out. There's a textbook TPO setup playing out here on the later end of this picture, and if you can figure out what it's telling you, then kudos to you, because this is a very actionable trade setup that we have right here. So I'm not going to spell it out for them.
That's the homework.
They can figure it out if they can.
Yeah.
Yeah, because I got a lot of help from some pretty smart friends, but they never told me the answer at all, right? They only ever gave me pieces of the puzzle, and they always expected me to figure it out myself, which is obviously much more difficult to figure that out, but so much more rewarding, because at the end of the day, when you do figure out some of the answers, and you've figured it out on your own, it's just such a much more rewarding experience that way. So I'm never going to. I have a tendency to over-explain, to give too much information, and I'm trying to give less and less to people so that they can figure out themselves. Just give them the breadcrumbs and let them figure it out. Because that was how I did it, and that's how I think it should be done. So I think I answered the how TPO is formed. It's just, it's 30-minute blocks is standard. You can change it to whatever you want, but 30 minutes is the standard. And you're just watching the 30-minute blocks develop over the day to show you where price spent the most time at. Let me hop over to the chat real quick.
One of them says, how do you access a TPO chart? And I think you just posted a video about that recently, didn't you?
Yeah, so you just need a charting software that gives access to this tool. So the two that I know of and that I have used are Sierra Charts, which is the one that you're seeing here. And also you can use Exo Charts. I would recommend people that are less experienced with these tools to start with Exo because it's significantly more user-friendly and a lot easier to get going on. And there's a lot of templates, right? You can go into Exo's Discord and just get, for instance, I have my template in their Discord, and a lot of other people do. So you can just go and copy paste somebody else's template to kind of dip your toes into TPO that way. And I'm not even really here to shill people on learning about TPO. This is just what worked for me. And I think that for a while it was kind of a flavor of the month kind of thing on Twitter. And all I would say is that if you think this will work for you, then give it a shot. But just because it works for me doesn't mean it will work for anybody else. I got lucky that this was kind of the missing piece to the puzzle for me, and that once I applied this tool to the existing system, I was able to really hit my stride and then kind of start to refine my system and simplify it. So for me, this was a big deal, but I don't know that that's going to necessarily be the case for everybody else. But yeah, I mean, Sierra and Exo, you have to pay monthly for these things. Any order flow tools you're going to have to pay for the most part because they're more advanced tool sets than just a simple candlestick type of thing. The data that's required to make these, it's just much more intensive for the charting softwares to provide you this, so you're going to have to pay for it. And I would say that maybe do some reading on it too before you take the plunge, but ultimately it's not like that expensive. I think it's $36 a month with Sierra, and I think it's also $36 a month with Exo. So it's not like the worst investment. You spend $40 and you get a month to try it out. And yeah, I would recommend Exo just because it's so much more user friendly. You can pretty much figure out how to operate Exo within 30 minutes of clicking buttons on it, and you'll be somewhat familiar with it. Sierra is significantly harder to learn. It's like it has its own learning curve, because the software is it's old and outdated, frankly, and they don't have any real reason to need to change it because Sierra is the best at what they do, I think. So they don't have any real reason to change. They're like the apex predator that just stops evolving because it's already won. Until something comes and threatens Sierra, which I don't think there ever will be, they're not going to change. So you look at their software and it looks like it's from the 90s, but they have just the best data out there for crypto, at least. I'm sure there's a better charting software for legacy.
Awesome. Well, I feel like that's a pretty solid brief overview of market profile, TPO. And I mean, if you guys think that's going to be something that can help you find your edge, it's at least worth giving a shot. So
we got a great question in here. What does TPO grant you that candlesticks aren't able to?
Mm-hmm.
Nothing. It doesn't provide you anything, actually. It's just a lens to view things. So it lets me view the market in just a slightly different way than candlesticks do. But you ultimately can do the same exact thing with candlesticks, where maybe hop on like a 15-minute, and ultimately all you're doing with TPO is you're trying to identify ranges. and trade the ranges. Now, everybody that understands price action, the basics of price action, does the same thing, right? Where we trade ranges, and you know that when you get a break, a directional break from a range, that you're probably going to want to keep going with it, right? So if we break above this, obviously you look to get long here and vice versa. If we break below it, you look to get short here to ride to the next range. That's ultimately what you're doing with TPO, but it just gives me a slightly different lens to view it. But you could do the same exact thing with TPO. You don't actually have to use it to get the same type of information.
Good stuff.
Not something, I think most people think that it's a special tool that you need or something, but you really don't. And you can get a really similar thing going with TradingView, because they have, the difference is that this isn't a true TPO. This is a volume profile. So it's not actually the same data, but it's very similar. So just so you guys know, you really can, you can start actually, that's what I should have said. Start with it on TradingView, because I think it's free on TradingView, although I'm not sure because I've had premium for a long time with them, so I'm not sure.
I think it is. I think you just can only have like a certain amount of indicators at the same time or whatever.
Right.
Cool.
It looks like the daily close is about to come, so I don't know if you want to take over for a second. I would like to talk about the prints before I hop off.
Yeah.
Because I think that people value that, but yeah, you should take over for a second, I think.
Okay. Yeah, I can give some quick updates, and then my cousin's actually on his way here to pick up his dog that I've been dog sitting for like 2 days, so I will step away for like 10 minutes when he gets here, and then you can talk about the prints. I'll rewatch it after because I'm interested too. But yeah, let me. So Ethereum's fixing its candle. It looks like it's going to close above 1850, which is a bullish sign. That means I'm staying in the longs I'm in for now. My stop is still just under 1800. So good to see this buyback here. It just happened quicker than I guess I would have expected. Like, we got this breakout. I didn't love that it retraced just about the whole thing right away, but because it's pushing away again, that is a good sign to me. And then with Bitcoin, I think it's just ranging for a little bit more. I don't know if this is going to be a separate range for us up here, like if we broke out of this one and now we're just going to be trading in here for a little bit. I mean, I don't think we're going to go straight up right after the daily close, but if Bitcoin just ranges for a little, it does give other coins a little time to move a bit more. So Bitcoin, not too worried about that. Ethereum looks a lot better than it did earlier because it is pushing up from that 1850 SR level. And it looks like this 4-hour close is going to be just fine. It looks like it wasn't or isn't a fake out. And check out this daily candle. We are about to get our highest daily candle close. So that's also another good sign in terms of breaking out of this little range that we've been stuck in, where 1850 has been capping us for so long. And then Litecoin, our compound position is looking really good. It's pushing up from 228, and it doesn't really look like much is going to stop this thing here. Looks like it's making this push up to 250. So those are the brief updates. We can talk more about these once Magus has to head out in around 15 minutes or so. But I am going to give my cousin his dog back, so I'm going to be gone for like 5 to 10 minutes, and I will let Magus talk about some more order flow stuff.
Right on. So before I start talking, guys, if you have questions, go ahead and start populating them in the chat so that I can answer them, since there is the stream delay. So yeah, if you have any questions, definitely throw them in there. But I think we're looking at my screen now. So these are screenshots. This isn't an actual live chart, but I want to show you guys what a footprint looks like, because this is what I'm actually using to execute. Or at least this is a big part of what I'm using to execute, is it's showing you, mine is set up to display delta and volume, but the traditional way is that you have the market buys and the market sells, right? That you should have traditionally you should have market sells on the left and market buys on the right. But I mean, ultimately, people can set it up however you want. And I don't use. If you look at the time at the bottom, it's not uniform because I'm not using time-based candles, which I think is really important to point out that if you want to get into more intraday stuff, that I don't think doing things based off of time is necessarily that great because it just doesn't represent things as clearly as if you have something based off of tick or based off of trend reversal. So I would say that you want to either do a trend reversal or a point and figure, which are essentially the same exact thing, or tick based. And what I'm doing with this is that I'm seeing how when we get to my level, because I have all my levels predefined before. I'm not gonna choose to trade a level when we get there. I'm gonna choose to trade a level before we get there, and then when we get there, I'm gonna watch the order flow. So the traditional way of doing things was was quote unquote reading the tape, where you would look at all the incoming market orders, all the incoming market buys and sells, and you would try to understand it all internally with your brain and make decisions. And I do use the tape, but it's very mentally taxing to try to soak in and absorb all the orders with your eyes when you can just go to a footprint chart and have all that data just stored and you can just access it whenever you want. So it's much less mentally taxing to do it this way. So this is what my footprint looks like. I don't know why it's cut off here. It doesn't actually show, but let me click on my Sierra so I can actually confirm. Oh, that's weird. Okay, so the top is delta. The middle, second to the top one is cumulative volume delta. The middle one is the delta percentage, and the bottom one is total volume. So what those are is for this candle, for instance, the aggregate of buying and selling was positive $4.2 million. So what that means is that out of all the market buying and market selling that were printed in this candle, that there was 4.28 million more buys than sells. So that's what delta is. It's the aggregate of buying and selling. And cumulative volume delta, which is the one below it, is showing you the aggregate throughout the entire day. So you're seeing that as you have a, let's see, the previous candle is the one we were just talking about. Our CVD was 12.8 million. And since we had a positive 4.28, now our CVD is, this minus this gives us this. So that's what CVD is. And it basically, CVD is probably the least important in my opinion, on the footprint. However, it can be really great when you're lining it up against a candlestick on more high time frame basis because you can see divergence between CVD and between the candlesticks. A lot of other people talk about that, so I'm not going to go ahead and explain that because a lot of people have content based on that. But the one below it, which is probably the least common one that people are going to see, is the delta percentage. So it is, it's the same thing as delta, but it's in terms of percentage. And for me, that just makes things really easy because the problem with these kind of charts for most people is it's an overwhelming amount of information for people. It's very difficult to discern what you should be looking at and what you shouldn't be looking at. So I use, the main reason why we use these colors is because I'm not going to look here and read all these numbers. I want the imbalances and the discrepancies in the volume to just be apparent in the color. So when I see dark red and I see dark green, right, and different variants and shades of those colors, it tells me what the imbalance is between buying and selling. And just to explain a little bit of what a setup would look like, let's imagine I had a level at 52,400. I had a level that for whatever reason I derived it from candlesticks, and then we got to that level, and now I'm going to decide what am I going to do with that level. So it in this instance it would be a resistance. So for intraday trade, I'm going to decide if I'm going to short it at that point. So what I want to see is I want to see volume above this level on the buy side. Okay, and that's what we see here. We see buyers stepping in above that. And what does that tell me is that these guys might potentially be getting trapped, because it's a two-way relationship, because we always think about the market orders, but I don't think people think enough about the limit orders, which are on the opposite side of that. That means that if we have millions of dollars of buys on the market side coming in, that means that there's somebody on the other end that is providing liquidity and they're filling limit sells, right? So it's important to think about the fact that every buy and every sell has a counterpart, and if if there's somebody that's filling limit orders and they're filling through the person's aggressive buys, they're filling sells through somebody else's aggressive buys, that it's becomes more likely that the level is going to fail. And you normally are going to have, I mean, this is kind of what would be a cherry pick example. It kind of worked out really well because I'm sure that price rotated down after this, most likely. That you have the aggressive buying into the level, you have the failure, and you have the second attempt where the sellers are actually present. There isn't very much aggressive selling present here, but they're present on the passive side because they're the opposite end of the trade. So you have the passive absorption, you have the rejection and swing down, you have the attempt back up, you have lots of volume come in, and what do you know? The sellers start to show up. So on a scalp trade, this would be a fairly decent short if this was a legitimate level. This is what you would kind of be looking for. And that's just an example of the most common type of order flow setup, which is the trap trader setup, which is for reversion. So you identify that people aggressively came into a level and the passive participant was too strong for the aggressive people to get through. And now we're going to go the opposite direction and revert back to the mean, which is kind of relevant to the TPO stuff, right? Because if you were to see this type of setup here, on an intraday setup, I'm going to get long when I see the passive participant overwhelm the aggressive participant. And I'm going to take profit once we get back to the mean. So that's kind of, off topic, but that's kind of how the TPO can be useful, because you know that if these are, that when you see these distributions, that when you get to the extremes of the distribution and you get a position on the extreme, that you want to rotate it back to the mean, or the most, where the most time was spent. You don't really want to be taking trades where the most time is spent on a day. You want to be taking trades where the least time is spent. And that's particularly for an intraday basis. So I'm going to look over to the chat and hope that somebody's asked a question.
I'm back.
Okay, right on. Let's see. Is there TPO algo anywhere on the interwebs? Not really. I don't know what that even means, actually. Have people made algorithms based on TPO? Absolutely, they have. There's probably a lot. I personally have an algorithm that uses TPO lines for its bias, and then uses simple indicators to actually execute them. So that definitely exists. Do Sierra have footprints? Absolutely. Yes, Sierra has everything. Exo has everything that I'm talking about right now. Both Sierra and Exo are going to have. And again, I'm going to say that you should look at Exo first, because it's just going to be significantly easier to get going. But yeah, both of these platforms that we're talking about have these footprints, and they have the TPO. How is longing perp sustainable when funding is paid 3 times a day? It isn't. It isn't sustainable for you as a long bias person. That's what I was saying at the beginning of this conversation, when I first hopped on with Cause, is that you don't, if you're trading an intraday bias where you're going to get in and get out, you can trade a perpetual and it's fine, because worst case scenario, you might get hit on 1 or 2 funding cycles on your intraday basis, depending on the exchange. that's not the end of the world. But if you're a swing trader, you don't want to keep paying funding every day because it eats into your profits. So you need to find a financial instrument that doesn't charge you funding to stay long, which are going to be spot and futures because there's no fee associated with maintaining the position. So I use perpetuals for my get in and get out trades, and I use spot and futures for my swing trades.
Me too.
Let's see. What time frame do you use footprints for, or on footprints for scalping? So that's kind of what I said earlier, is that you can use a time-based footprint, and I would probably say you want to use something like a 5 or a 15 minute. But I don't actually use time-based prints. I use, like I said, there's two different types of well, there's actually a lot of non-time-based ones. There's point and figure or range, which are the same. Essentially, there's tick-based, which is number of trades, which is what I use. Uh, Um, it I have a certain amount of trades have to go through before it's going to print another candle. There's volume-based, so after a certain amount of volume, it prints another candle. It doesn't really matter what you use, just all that matters is it makes sense to you. And I do think that it's not that great of an idea though to use time based for lower time frame stuff, right? If you really want to be an intraday person, you should use non-time based charts as much as possible. Oh, they're saying, is the quality not that great on my chart, unfortunately? Well, that's ultimately you don't really, that doesn't really matter for you guys.
Yeah, we're just talking about the idea, I guess.
Yeah, we're talking about the idea, and like I said earlier, that I'm not over here reading all these numbers. That would be a waste of energy for me to do that. I'm looking for the bright colors. As dumb as that sounds, I mean, we're all apes here, right? We're all, apes. That's what I'm looking for. I'm looking for the colors to give me an indication of when I need to look at things. So when I see a dark red, and we're dark red at a resistance or at a support, that tells me something. Or when I see a dark green at a resistance or at a support, that tells me something, and I can use that information to, discern what I should do and act with it.
You can use that information to DM me and tell me what to do.
There you go.
Right.
Great question right here. Are how unuseful or useful are heat maps for you? So this is a really great topic because a lot of people on Twitter talk about order flow, and then you see them show a heat map afterwards, and that is wrong. A heat map is not order flow. A heat map is showing you resting limit orders. That's all it's showing you, is that it's showing you the resting buys and sells that are on the order book. It doesn't
you could say
mean anything.
It's more like order book, not order flow.
Yeah, exactly. It's showing you the order book. That's all it's showing you. What I'm showing you guys here with the footprint is actually transacted volume. So this is volume that has actually gone through and been executed. And I'm not saying that you can't use a heat map to your advantage, but it's kind of like guesswork, because how do you know that that buy or sell wall are going to matter when price actually gets there, right? I could have the biggest buy wall in the world right below price, but when we get there, who knows if I'm going to fill it? My algorithm might instantly just yoink all that liquidity and let price just collapse. So I use volume that has actually transacted versus volume that could transact. And that's a big discrepancy. A lot of people on Twitter don't really understand that, I think. And I have one friend that's a true degenerate, I'm not going to name, but he likes to go off on people for that, and it's always entertaining to read his crazy tweets. So next question, how do I incorporate VWAP, high volume, low volume, all that kind of stuff? I don't use VWAP on candlestick. I do use it on my footprint, however. Unfortunately, I just don't think that I have it in the image at all. But I do, I mean, it's just not pictured in here, but I do have a VWAP on my footprint. And it's just nice to know if you're above or below it. I mean, I don't have some sort of like actual system around it. It's just, I'll use, something like VWAP more for confluence, right? I want to, if a VWAP lines up with a level that I have, for support, for instance, right? If, I'm waiting to get long at support and it just so happens that the daily VWAP lines up with that support level, right? I'm just more confident that the level is going to hold because of that. And I'm much more likely to take the trade if I see overlapping levels. But with the like high volume node and low volume node, personally, I like low volume nodes more than high volume nodes for action. But um, you know, I'm not really going to go too far into the volume nodes. The previous value area high and previous value area lows, those can be great too because it's similar to how a price action trader is going to use like a monthly open, a weekly open. It's the same exact idea that when prices is breaking through that level, that's useful information for you, right? So if with your example of like we'll use the previous day value area high, if price is getting through that and it's now flipping it and using the previous value area high as support, it's obviously a bullish thing. So it can be just good for bias. Is what I would say that those are good for. And something I should have pointed out early too, and there's a reason why I'm talking about order stuff with you and not talking about more simple things, because order flow is, as much as I wanted to make a systematic approach to order flow, it's pretty much impossible unless you're an incredibly smart person. And I recognize I'm a fairly average person. So for me, order flow is very discretionary. And I'm using these colors that I'm talking about and I'm trying to make decisions on my own. But before any of this order flow stuff comes into play, I do have a truly mechanical approach with simple indicators. So that's what I would say. That's some alpha for you guys, is that simple indicators get made fun of a lot, but with proper testing and proper understanding, they can be incredibly useful. And especially when you get really good with simple indicators and then combine the order flow tools on top of it. So, for instance, let's say you have a simple set of indicators and they tell you to take a long at this level, and then your order flow tells you the same thing, right? I mean, that's essentially what I'm doing when I'm scalping, is that I want to see the confluence between those two ideas. Okay. Yeah, I mean, also, I do ramble about these kind of things a lot on my YouTube channel. So I would say if you want to learn
Yeah,
this
let
kind of
me.
stuff, I do try to explain it a lot there.
I just
And I'm gonna
plugged the
start
link.
posting on there more. I appreciate that.
Yeah.
I'm gonna start trying to do at least a weekly post. I got really lazy with it because of how busy I had been with dealing with the bull market and stuff. So I hadn't posted for a while, but I did do my first post the other day for a while. So I'm going to try to do at least one post a day to help out some people, because I do find it very rewarding when you get messages from people that are, that wow, that you really helped me with this kind of thing. I do thoroughly enjoy seeing people learn things. So yeah, I like to help. So I'm gonna try to post some more content soon. Let's
Yeah, so
see.
that link I just posted, guys, in the chat, that's Magus's YouTube channel. If you want to give him a sub, then go do that. Actually, please do that.
Appreciate that. Question: how do you group the data without time-based candle delta? Yes, it can be. You can do it off of delta. So when a certain amount of delta is present, right? Like I explained what delta is earlier. So when you have a certain level of delta, a certain threshold of delta, you can print a new candle. You could do it on total volume, right? So you could do every time $50 million worth of volume goes through, you print a new candle. You could do it that way. You could do it based off of tick. So after a certain amount of trades go through, it prints a new candle. You could do it off of point and figure, which is going to be like more of a reversal chart. It doesn't matter. Um, my driving home point that I would really like for everyone to take from what I'm saying right now is, doesn't matter what tools you use. All that matters is that you're very comfortable with them and they make sense to you. You could have the most complicated or the least complicated system in the world, but what matters is that you're very good with it. A perfect example of this, and I'm sure he has more complicated things that he doesn't share even with his friends. But Cold-Blooded Chiller, he shows these RSI trades all the time, and RSI is the most simple indicator for the most part, right? That's the one that we all learn day one before we even know what price action is and stuff. We know what RSI is, and he makes it work with a simple indicator because he's so good at it, and he spent so much time understanding what it is and back testing it and stuff to where he can have conviction behind his trades when he sees his setup. So that's the driving home point I would like for everyone to take home here is that get really good at whenever you find whatever works for you and what you like, just get really good at it. Spend lots and lots of time researching it, understanding what it's telling you, and back testing it because that is the turning point for most people that become consistently profitable is that they have the data to back their decision making. Um, and not only that, but it also makes things far less stressful. That when you know that this setup has this probability of succeeding, so I can go ahead and take that. And even if I'm wrong, I know that it was a good trade because it had this expectancy. And I know that most people aren't, I'm going to tell people to do that. I know most people aren't going to do it anyways because it's incredibly difficult to do. And, if you don't have a coding background, you have to do manual back testing. But once you have manually back tested something enough to where you think it works really well, you need to partner with somebody, or you have to learn to code yourself or partner with somebody that can do it for you, which is what I did. I'm a really terrible coder, even though I know the basics of it, and I've just partnered with people to help. You have to trust them though, because if they're not your friend, right, you're potentially exposing lots of useful information. Yeah, exactly. But I think really the whole idea of alpha doesn't really exist actually for most people. The only people that I think the alpha really exists for are the people that really understand, or not that understand that you have to be really smart and really good at coding, and those people can identify inefficiencies in the market and exploit them or arb them until that goes away. And that's what alpha is. I mean, that's my own definition at least. For a discretionary trader like myself, you're really best off just finding multiple things, that give you advantages or increase your probability of succeeding, um, which can be the kind of things I'm talking about, right? You have simple indicators that you've tested that give you, um, you know, decent odds, and then you can use the order flow to increase your odds. And a big thing for me was ultimately accepting that even though I've done all the work to have the testing and whatnot, and know that I have high probabilities, I'm a gambler, and every time I take a position, it doesn't matter that the odds are in my favor. I could still always just be wrong. And there's no certainty in the market, that you got to accept that the market is uncertain, and that the best thing you can do is put the odds in your favor, and you're still going to take L's. And that your system needs to be built around that idea that you're going to lose, and that you need to control your losses when they come, because they will come. It just we're small fish in a big pond, and there's very few traders out there that have this, the economic strength to actually push positions in their favor, right? Those people exist where they can take longs and, push the book up, but that's not going to be any of us. You just need to really more so learn how to identify those guys and, you know, swim with the current, so to speak. That's really what the Oracle stuff is so great for.
Yeah, I like it.
Somebody asking how to do the footprint on Exo. I actually have a video on my YouTube channel where I spent like 20 minutes where I was going through all that stuff. So I would just say go to my channel, and you can do it that way. And I dig the Bruce Lee quote here too, definitely.
Yeah, that's fire.
Anyways, I think that's probably good. I
Yeah.
probably talked too much, to be honest, and it's probably too much information for most people.
No, you're good, man.
But,
That was awesome.
Right on.
I appreciate you hanging out in the stream, and we'll have to do this again sometime. I think everyone enjoyed it, and it's good to get some TPO insight.
Yeah, right on. And I don't always do the best job of posting on my Twitter. I'm not the most active person, but I do post some things, and I don't really do that much shit posting. Most of the time when I post, it's going to be more geared towards educational stuff. So yeah, if you guys want to learn stuff, with this kind of more nerdy approach of order flow, then check out my Twitter.
Yeah,
and,
I just pulled it up on the screen so they can see it at TraderMagus. Give him a follow.
Appreciate that. But yeah, I appreciate you having me on, and
Of course.
I think this might be the first time I've ever done one of these kind of. I did one with one time, but it was like super casual, and
Yeah.
you're just like we were just talking like about bullshit the whole time. But this is my first time like trying to do some sort of educational based stream, so I appreciate you having me on, man.
Of course, man. It was a lot of fun. Thanks for being here. And I know you said you had to head out around this time, so.
Yeah, the timing worked out perfectly for me.
Yeah, it is perfect. I think, just so you guys know, I guess the chat, I'll stay on for a little and do a couple of the chart requests you guys were asking about earlier, but everyone give Magus a follow on Twitter and subscribe to his YouTube, and yeah, thanks for stopping by.
Right on, dude. All right, well, we'll have to keep in touch then.
Yeah, I will. I'll talk to you soon.
Okay, sounds good.
Thanks,
Later.
bro.
Yeah, peace.
All right. Well, that was sweet. Really happy that he was able to come on. All right, so we'll just do a quick rundown of kind of the usual thing we usually do on here. Talk about the daily close briefly. I'll look at a couple of the charts you guys were asking about, and then I will hop off as well. Bitcoin pushing up off the daily open. I don't necessarily trust a pump right off the open, but yeah, not a lot to take from that. Ethereum, really glad that it was able to hold above this level. It looks like we already retested it in this new daily candle right down there. This thing could really get trending, and if this is a true breakout above 1850, I think it's really going to pop. So Ethereum is looking good, guys. And then same with Litecoin. I mean, really strong 4-hour close, really strong daily close. Like, this is one heck of a candle. As long as we stay above like 227, 228, we might get a little retest there, but overall, this is looking really bullish. I'd like to see it hold above 230. Maybe we come down a little to start the day and then end up pushing higher from there. I see Atom is one you guys want me to look at really quick. We talked about this yesterday, and same thing. There just isn't a lot for me to say about Atom right now because it blew up so quickly, and right now it's just kind of ranging. So last few days, it's just been stuck in a range. If we get some type of breakout from here, that's not the one. Range. There we go. Then I think you could look to long or a sweep of the low. So either something like this or something like that. But right now, I don't really see anything to do for Atom. I know someone wanted to see Dogecoin. I don't know if you're still here or not, but I personally wouldn't really touch this. Swept the high, retracing. I mean, it's in daily demand, might bounce from here, but Doge it's just a meme. It's kind of a pump and dump, so it's not something I actively trade unless there's a ton of volume and volatility with it. But right now, it's literally just slowly bled down for the last week. So there's not much I would do there. Did I convert my ETH back into BTC? Yeah, yesterday I converted some Ethereum and Litecoin into Bitcoin, but I am long Ethereum and Litecoin as well. majors are going to pump, I expect XMR to do good. Can you take a look at XMR BTC high time frame? I sure can. Yeah, so this, I would say this is showing the first early signs of a breakout. Obviously, it was kind of in this massive downtrend for a while, but it's starting to show some signs of life. I think this supply right here is an area to keep an eye on because that's kind of the origin of this major dump. And then also, I'd like to stay above there if possible. So maybe bounce to there, tag this. But once we get above that supply, I think this will be looking really solid. I honestly don't know how many questions I missed from earlier, so if I missed a question from earlier, you can go ahead and feel free to spam that again. I'll stay on for a little bit longer. We've been going for about an hour and a half, but I know we weren't reading the chat a ton throughout the stream, so if you're still around, feel free to drop any other questions in there. If Ethereum can start pushing, guys, it could be big today. Like if this is our breakout and it's not just another one of these, I expect this to pump quickly. Lit, is that a coin? Do you think it still makes sense to convert some alts to Bitcoin, ADA, for example? Honestly, it just depends on your investment strategy. If you're, it depends what you're accumulating. I mean, this chart doesn't look bad. We dipped right into daily demand. I just think Bitcoin breaking out of consolidating for 8 days right here, I just felt like Bitcoin was going to kind of steal the show. And so that's why I converted some of mine. Safe to hold XMR. Aren't they going to block it? I have no idea. I don't know anything about the fundamentals of it. H-bar. Perp. Nope. Don't have it on. FTX. All right. We had a, oh my goodness. Hold on, let me just change this just briefly to the white one. That's really bright. This was, are you kidding me? This was our plan from the other H-bar stream. Followed the squiggly nicely, broke above the mid-range, kind of fell back through. Above the mid-range, breakout, retested the range high. Yeah, not much else to say here. We kind of nailed this one. What would be the time to ape into alts after BTC correction? Yeah, I think after Bitcoin makes its run, however high that's going to be, I don't know yet. But once it looks like Bitcoin's made its run, then we can look to start rotating some money back into alts. All right, couple more, guys, and then I think I'm going to call it. Let me change this back to the dark. I mean, it looks like a bullish chart. It's never really gone down, but that kind of scares me a little. I would just say like play ranges on this if you can. Maybe this right here. I don't love that. Maybe this. That fits a little better. Maybe you get something like this, back above the mid-range, and then the range high. Good look for something like that, but it's not a pair I really trade. BAT. Looks bullish. I mean, some USD pair alts are going to do fine. I just don't think they'll perform as well as Bitcoin, at least the majority of them. Looks like this is a pretty clear SR level here. See, it was support here, support, broke, resistance. So you could start looking for some long setups on a flip of that. What if the corn never stops? Then we keep making money from our Bitcoin holdings. That's for sure. Aave. Yeah, I'm not sure what's happening with DeFi right now. Like if it's gonna take a back seat for a little while. Just gonna clear this entire chart, but it went on such a run that I kind of just expect it to range for a little bit, and this is the range I'm kind of watching. We barely tagged that low, so it might come back down again, but if we get like more of a sweep, maybe into this 4-hour demand, and then back above, that's when I'd be interested in Aave again. Alright guys, I know this stream was a little different than the normal one, but I hope you guys enjoyed hearing Magus talk for a little while. He's a really smart dude, so it was fun to have him on. And we can keep doing what we're doing. Maybe I'll post a recorded video tomorrow or something like that, just going over a few coins. But if there's anything I see, you guys know I will update you as soon as I can. But yeah, Litecoin, Ethereum, Bitcoin, they still look fine. And let's hope Bitcoin keeps running. Do I look at USD or BTC pairs before taking a swing trade? Typically, I trade the USD pairs, but I'll look at the BTC pairs for some more confluence. And it's like if ETH BTC is super bullish, I might convert some Bitcoin into Ethereum, just because if that's bullish, it means Ethereum should outperform Bitcoin. So thanks for being here, guys. I know it was kind of a long one, but it was a good time. I will talk to you in the next stream. See you guys soon.